British consumer price inflation jumped to its highest level since February 1982, coming in at 10.1% in July, up from an annual rate of 9.4% in June, putting further pressure on households. The increase was above economists' forecasts, which were expecting it to rise 9.8% in July. And despite warning that a recession was likely, the Bank of England earlier this month, we saw them raise interest rates by 50 basis points to 1.75. And this data out this morning suggests that they're unlikely to go for anything less than 50 basis points at the next meeting in September. Let's take a look now at a chart of the pound to see how it's been reacting to the latest data. And you can see so far the pound against the dollar, the reaction there is slightly muted. We have seen a little bit of a spike there to the upside, but undoing those gains throughout the morning, as you can see now hovering around that area of support at the 76.4% Fibonacci at 120.80. Now, remember, yesterday we saw the real value of UK workers' pay continue to fall at the fastest rate for 20 years in the month of June, as wage increases were outstripped by soaring inflation amid the high cost of living. So this data out this morning also confirming that higher inflation putting pressure on consumers. We saw the ONS yesterday confirming that the annual growth in average pay, excluding bonuses, strengthened to 4.7% in the 3 months to June against the backdrop of low unemployment and high vacancy jobs. However, the real value of workers' pay actually dropped by 3%, the fastest decline since the comparable records began in 2001 after taking into account their preferred measure of inflation. So yesterday's data also putting there a little bit of pressure on UK households. So far yesterday, we managed to see a little bit of upside there on the pound against the dollar. Remember, we have seen this pair trading to the downside as well because of that recovery on the US dollar side of the trade. But for now, finding some support along that Fibonacci. We've seen that throughout the month of August, back here on the 5th, the 8th, and 9th of August, we saw that support coming in along this area. Are we in for another attempted bounce higher? It does look like we are positioning to see that happen. But again, expect to see resistance once again at 122.90. And I expect to see cable trading sideways with a little bit of a bearish tilt until we see that next Bank of England meeting, and we'll see exactly what Governor Bailey and his teammates are thinking.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.